Hi, hello, dear friends. This is Dr. A B JENA, Senior Assistant Professor, PG Department of Business Management. Once again, I am welcoming to all of you to Dr. A B JENA classes. And today's discussion will be the business risks and what are the different types of business risks, and as well as what is the difference between the systematic risks and the unsystematic risks. And this video or this discussion will be very useful to the particularly to the graduate and the postgraduate students so far as the commerce and management discipline is concerned. Okay, so dear friends, without any delay we will start today's very vital discussions, and frequently you may get the questions in UGC as well as in other competitive examinations. So without delay we will start our discussion. So the business risks will influence the profitability positions of a business as well as so the risks will be the threat and will be the threat as well as the problems for the growth and development of the business. So far as the growth and development is are concerned from the business point of view, so the business risks influence the profitability positions of a business. Okay, so I have written there are 8 types of risks, and in another video, separate video, we will discuss in detail with regard to the interest rate risks, equity risks, currency risks. So what are the or when so there will be the interest rate risks, equity risks, or in which situation such types of risks arises. So after that we will discuss in detail what is the basic difference between the systematic risks and the unsystematic risks. Okay, dear friends, without delay, today we will discuss our discussion on the risks and what are the different types of risks. Okay, what is the meaning of risks? So risks, what is the meaning of risks? So normally, so risks may be defined as possibility of risks. Okay, sorry, possibility of a loss. When the risk is concerned, definitely, so there will be the chances or there will be the possibility of a loss, which may be the financial loss, or which may be the financial loss, or the loss of image or the reputation. So dear friends, so this is the meaning or the definitions of the risks. Again I am repeating, the risks may be defined as possibility of a loss which may be financial, or the loss of image or the reputation, so far as that is the natural person or the artificial person's point of view. Okay, so I have written there are 8 types of risks, and other types of risks we will discuss in detail in another video. What are the causes of interest rate risks or equity risks, like this. Okay, the description. Okay, so first one is that is the interest rate risks. What is this interest rate risks? The central government of a country changes the rate of interest by change the monetary policy. Just 2 days before, the RBI announced the basis point. So after that, so the loans on the various types of loans, the interest rate is more. Okay, the equity risks. What is this equity risks? It is the risks. Equity risks is a risk of a possibility of changes of prices of stock or the stock indices. So far as the stock indices are popularly Nifty 50, BSE Sensex, and the Nifty 500, S&P BSE mid cap, then S&P BSE auto index, etc. So these are the stock exchanges. So normally you will find in BSE Bombay Stock Exchange, or in NSE National Stock Exchange. Okay, so third one category of risks, it's the currency risks. So what is this? It arises from the exchange rate. From the exchange rate fluctuation that occurs B slash W, it's the between different currencies. Okay, next one is that is the commodity risk. What is this commodity risk? It arises when the essential commodities price changes in international market. Now what is the situation of that is the crude oil, petrol, diesel, like this. Okay, then another is that is the commodity risk. It arises when the essential commodities price changes in the international markets. Okay, next one, the risk is that is the margining risk. What is this? It arises out of the unfavorable margin calls covering a positions. Okay, again I am repeating, margining risk, it occurs out of unfavorable margin calls covering a position. Next one is that is the country risk. Now what is the situation of that is the war between the Russia and Ukraine? So almost all the countries, so they are facing the problem. So country risks, so such risks are the political environment, ENVT stands for environment and stability, fiscal deficit levels and the government rules, etc. So detail we will discuss what are the causes and what would you will take the steps against such risks. Next one is that is the market risk. So market risk, it's also known as what is the systematic risk. Again I am repeating, the market risk, it's also known as that is the systematic risk. What is this? It is the risk of changes. It is the risk of changes or the decrease in value of investment due to the changes in uncontrollable factors. Uncontrollable factors, as we know the business environment, that is okay, the political environment, economical environment, socio-cultural environment, technological environment, legal environment. So they will influence the profitability positions, or they will influence, or they will influence the growth and development of the business. Okay, the market risk, it's also known as that is the systematic risk. It is the risk of changes or the decrease in value of investment due to the changes in uncontrollable factors. Okay, so last one risk, it's the unsystematic risk, just the opposite of a systematic risk. So it is a risk associated with the particular industry or particular security. Once again I am repeating, unsystematic risk, it is a risk associated with a particular industry or security. Okay, so in another video we will discuss in detail about what are the causes of interest rate causes and other risks. Okay, dear friends, so now we will move towards what is the basic difference between the systematic risks and the unsystematic risks. Friends, now we will discuss what is the basic difference between the systematic risks and the unsystematic risks. Okay, so far as the basis of comparison, I have written the 9 basis of comparison. By taking into consideration 9 basis of comparison, easily we can compare in between the systematic risks and the unsystematic risks. Okay, dear friends, so first one is that is the meaning. What is the meaning of systematic risks and what is the meaning of unsystematic risks? Okay, systematic risks are uncontrollable. Okay, so systematic risks cannot be controlled in nature by its nature, and the systematic risk arises out of the external factors. External factors are such as the political factor, economic factor, legal factor, technological factors, etc. So these are the external factors. Unsystematic risks are controllable. Systematic risks cannot be controlled, whereas the unsystematic risks can be controlled in nature, and the unsystematic risks arises out of the organizational or the internal factors. Okay, so dear friends, systematic risks are uncontrollable in nature, and systematic risks arises out of the external factors such as the external factors, political factors, economic factors, legal factors, technological factors, etc. Unsystematic risks are controllable in nature, and these risks arises or unsystematic risks arises out of the organizational or the internal factors. Okay, friends, move towards the second basis of comparison. It's the nature. So nature. So systematic risks are non-diversible. Systematic risks are non-diversible in nature. These risks cannot be controlled, minimized or eliminated. Okay, whereas unsystematic risks are diversible in nature and unsystematic risks can be minimized, unsystematic risks can be controlled, in unsystematic risks even can be eliminated. Okay, so third one, move towards the third one basis of comparison. It's the factor of or the factors responsible. What are the factors responsible for the systematic risks and what are the factors are responsible for the unsystematic risks? So systematic risks takes place to the external factors, or the systematic risks takes place to microeconomic factors. So it's that is the pastel. So pastel, so it's the business environment or it's the micro business environment. P stands for political environment, E stands for economical, A stands for socio-cultural environment, T stands for that is okay. So T stands for that is the technological environment and L stands for the legal environment. Once again I am repeating, the business environment are the external factors of business environment or the micro economic or the micro business environment. Pastel, P stands for political environment, E stands for the economic environment, A stands for that is the socio-cultural business environment, T stands for the technological, and the last L stands for the legal business environment. Whereas in the case of unsystematic risks takes place due to the internal or the organizational or the that is the microeconomic factors. Okay, that is the macro. Okay, macro. So micro business or economic factors. So third one basis of comparison, it's that is the measurement. So systematic risks can be measured by beta. What is the meaning of beta, dear friends? You see, so beta, it is used in CAP, that is the capital asset pricing model, CAPM. So CAPM stands for what is this? Capital asset pricing model, which describes the relationship between B/W. It's the between the systematic risks and the expected return on assets, usually the stock. Okay, so dear friends, so once again I am repeating beta. So beta, it is that is the tool or it's the that is the financial strategy which is used, okay, in the capital asset pricing model, which describes the relationship between the systematic risks and expected return of the assets. So usually in the case of stocks, okay, but in the case of unsystematic risks, so these risks are not measured or indicated by any tool. So tool is there in systematic risks, normally it's the beta. And the next one basis of comparison, it's the impact. What is the impact of systematic risks and what is the impact of unsystematic risks? Okay, friends, so first we'll have the discussion what is the impact of systematic risks. Okay, so systematic risks can make the impact where in the industry, market, as well as also the economy too. Okay, so the industry, market and the economy will be influenced through the systematic risks, whereas in unsystematic risks, so these can make the impact only the certain organization or the particular industry. So we are getting the news both the print and electronic media. So the unsystematic risks, we are getting the information only for the certain organization or the particular industry. So next one, sources, basis of comparison, it's that is the sources. What are the sources of systematic risks and what are the sources of unsystematic risks. So in the case of systematic risks, so risks are related to where the sources of systematic risks, okay, interest rates, okay, material risks, purchasing power also, and on unsystematic risks, so the sources are the financial risks, business risks, insolvency risks, etc., and also the operational risks. So these are the sources for the unsystematic risks. Okay, so next one, it's what are the examples of systematic risks as well as what are the examples of unsystematic risks. Okay, dear friends, so first we will discuss the systematic risks. The examples of systematic risks are inflation. Okay, so the inflation, so it's a general tendency of okay, rising the day to day the essential product or essential commodities. Inflation, movement in interest rate, poverty also, so higher rate of unemployment, etc. So these are the examples of systematic risks. Okay, so what are the examples of unsystematic risks? So these are the higher labor turnover, okay, higher overhead charges, okay, manipulation the financial statement, higher operational cost. So these are the examples of unsystematic risks. Okay, so next one, so how the systematic risks will be protected, similarly how the unsystematic risks will be or are being protected. Okay, protection, or it's, we can say that is the hedging. What is the meaning of hedging? So hedging, it is an investment. Hedging, it is an investment that is made with an intention or with an objective of reducing the risks of adverse or unfavorable price movements in an asset. Okay, so frequently you will get the question, what is the meaning of beta and what is the meaning of hedge. Okay, hedging or the hedge, once again I am repeating, it is an investment that is made with an intention of reducing the risks of adverse price movements in an assets. Okay, so dear friends, you have to remember. Okay, so in systematic risks, the protection is concerned with the asset allocation. So the business organization has to allocate the assets in such a way that the risks or the unfavorable price or uncertainty can be minimized or can be avoided in some extent, whereas in unsystematic risks, the protection with the portfolio diversification. So the unsystematic risks can be protected with the help of a portfolio diversification. Okay, so last but not the least, the basis of comparison, it's the types of systematic risks. Okay, very interesting. So you will get the question in competitive examination, as well as in your examination, what are the types or kinds of systematic risks and the unsystematic risks. So these are the types of systematic risks are interest risks, inflation risks, market risks, etc. And unsystematic risks, so these are the financial risks, business specific risks, etc. So dear friends, you can take the screenshot of this discussion, the basic of comparison. So there are 9 bases of comparison. By taking into the mind 9 basic of comparison, easily you can compare or distinguish in between the systematic risks and the unsystematic risks. Okay, dear friends, so this is all about today's discussion. If you like it, kindly you forward it, kindly you subscribe it, kindly you share it. So I am hopeful, so you have learned a lot out of this discussion. So once again, thanks a lot to all of you.